Hello, I am Kato, CFO. Today, I will explain how Hitachi intends to enhance corporate value while balancing sustainable growth with disciplined management, focusing on our financial strategy and risk management. Specifically, I will discuss the four pillars that support the enhancement of corporate value: cash generation capability, capital allocation, capital efficiency, and risk management. First, I will explain how we are strengthening our cash generation capability, which serves as the foundation for both growth investments and shareholder returns. Driven by the Lumada business, we are continuously expanding core free cash flow through revenue growth and margin improvement. Over the 2-year period from FY 2025 to 2026, both revenue and margins are expected to improve steadily. EPS is also expected to grow at a CAGR of 19% over these 2 years, and we intend to continue increasing it going forward. Furthermore, through improvements in CCC and other initiatives, we continue to maintain a conversion rate from net income to core free cash flow that exceeds our target of 90%. As a result, core free cash flow is expected to grow at a CAGR of 28% over the 2-year period, even excluding the impact of large advance payments, and we will continue to expand it going forward. The second pillar is balanced capital allocation between growth investments and shareholder returns. Our capital allocation policy has remained unchanged since last year. While emphasizing returns, we will continue to allocate cash flexibly and in a balanced manner between growth investments and shareholder returns. First, let me discuss inorganic investments that support sustainable growth. As discussed today, we will focus on strengthening digital capabilities and expanding services, with the majority of transactions expected to be bought-on acquisitions that reinforce our existing businesses. Investment decisions will be made based on alignment with Hitachi's growth strategy, as well as careful assessment of risks and returns. Regarding financing, we will utilize leverage when appropriate while maintaining financial discipline. For shareholder returns, our policy is to continue increasingly the level of returns over the medium to long term. At a minimum, we intend to return more than half of core free cash flow and net income to shareholders. For dividends, we prioritize stable growth in line with business performance, while share repurchases will be conducted flexibly as needed. In summary, our approach of cash allocation is illustrated on the right-hand side. First, core free cash flow will be allocated between growth investments and shareholder returns in accordance with the principles I just outlined. Next, proceeds from asset sales will be used for growth investments if suitable opportunities meeting our strategic and return criteria are available. If not, those proceeds will be returned to shareholders primarily through share repurchases. Leverage will be utilized for growth investments while maintaining financial discipline. Here, let me explain how we have advanced growth investments within our capital allocation framework. Since launching Inspire 2027, we have steadily accelerated portfolio transformation aimed at expanding the Lumada business. Growth investments are evaluated through a disciplined decision-making process that considers both strategic fit and hurdle rates. As a result, the number of internal reviews related to portfolio transformation tripled year over year, significantly accelerating our efforts. Specifically, we advanced portfolio transformation through the divestiture of our ownership interests in these asset sale transactions. We also successfully executed inorganic growth investments that contribute to the expansion of Lumada, particularly in the digital service business. Next, I would like to explain the progression of our expanding shareholder returns. Supported by growth in core free cash flow, dividends have increased steadily in line with our policy, marking 10 consecutive years of dividend increases. Share repurchases are conducted flexibly, taking into account cash generation capability, financial condition, and progress in asset sales. On cash payment basis, dividends per share are expected to increase from 41 yen in FY24 to 55 yen in this fiscal year. Share repurchases are expected to increase significantly from 200 billion yen in FY24 to 550 billion yen this fiscal year. As a result, the total payout ratio is expected to rise to 94% this fiscal year, while total shareholder returns are projected to increase from approximately 390 billion yen in FY24 to 800 billion yen in this fiscal year. The third pillar is improving capital efficiency, which supports the enhancement of corporate value. Through the expansion of the Lumada business, we have increased returns and optimized invested capital, enabling us to improve ROIC again in FY25. Inorganic growth investments are essential for sustaining business growth. However, even if ROIC temporarily declines following an investment, we will work toward a swift recovery by improving ROIC and reducing WACC, thereby expanding the ROIC spread. For FY27, even after factoring in future inorganic investments, our target is to maintain the current level of ROIC. Let me now introduce the key initiatives for improving ROIC. On the numerator side, we are driving higher returns by strengthening the growth and profitability of our 4 core sectors with the Lumada business at the center. In addition, we will further expand the use of AI to improve productivity. On the denominator side, we will optimize invested capital through measures such as portfolio transformation, asset-light management, and optimization of shareholders' equity. In addition, to expand the ROIC spread, we will work to lower WACC, including through the appropriate use of leverage. The fourth pillar is strengthening risk management to protect and enhance corporate value. As Chief Risk Management Officer, or CRMO, I currently oversee risk management activities across the entire Hitachi Group under the leadership of the CEO. In today's rapidly changing business environment, we are advancing our enterprise risk management framework, enabling our business, regions, and corporate functions to work together in identifying and addressing key risks across Hitachi in an integrated manner. Our approach to risk management focuses not only on mitigating losses from threats, but also on capturing growth opportunities. In enhancing our framework, we are focusing on 3 key areas. From a comprehensiveness perspective, we have established common risk categories across the Hitachi Group and identified our key risks. From a timeliness perspective, additional countermeasures for key risks are discussed at monthly management meetings, enabling us to respond quickly to changing conditions. To strengthen organizational responsiveness, we have assigned risk management officers, RMOs, across business units, regions, and corporate functions to drive risk management activities. Within our framework, key risks are organized into a company-wide risk heat map to help minimize risk exposure. Examples include procurement, which is affected by development in the Middle East, talent, which is critical for growth and productivity, and technological advancement, including opportunities arising from AI. In response to developments in the Middle East, our business, regions, and corporate functions are working together to accelerate mitigation measures. With respect to AI, we believe the growth opportunities for Hitachi far outweigh the associated risks. As discussed today, we will pursue growth opportunities by applying physical AI to mission-critical social infrastructure and by supporting our customers' AI transformation initiatives. Finally, I will summarize the key messages I would like to take away from today's presentation. Even amid a rapidly changing business environment, Hitachi remains committed to balancing an unwavering pursuit of growth with disciplined management while striving to become a global leader in digitally transforming social infrastructure. By steadfastly adhering to the four principles I have discussed today and continuing our dialogue with investors, we will achieve the sustainable enhancement of corporate value. We sincerely hope for your continued confidence in Hitachi's future. Thank you for your attention.